Hello, and welcome to this episode of Inside Legal ESG. My name is Pam Cohn, and I'm privileged to serve as the host of this podcast series. Today, our guest is Phillip Charm, co-founder of Clarasight, and we're going to get into the history of Clarasight and its predecessor company, Climate Club. Welcome, Phil.
Thank you so much for having me. I'm really excited to be here.
So I sort of tipped the hand already. Tell me a little bit about Clarasight and its predecessor company, Climate Club, and what made you decide to found such a company?
Yeah, it's a great question. So I will try to keep it brief, but our story and Clarasight's story is very similar to many startup stories, which it starts to look like a straight line when you look backwards, but it was anything but through the journey. Part of our story really starts many years ago, which is my co-founder and I were college roommates, met the first week of school and became very close friends, coming up on 25 years ago. And each of us took a very different path to come here. We both started up in more traditional corporate America in consulting. And then relatively quickly, I moved into the startup world in the enterprise software realm. And he started what I'll call for-purpose businesses, really in the education space. He was a serial entrepreneur and founder, and I slowly progressed, helping build and scale companies from an earlier and earlier stage. But our relationship for almost our entire time together has been personal. And then coming up about a couple of years ago, our company was founded about 3 years ago, something changed. And each of us had just come off a pretty intense scaling and building of the company. And we took a step back and recognized that given the stage of life we were in, given the age of our children, given how hard it is to build a company, we wanted to be very intentional about what we were doing and who we were doing it with. And that in some respects changed the criteria of what we wanted to do. So what we were doing is we really wanted to focus on something that would have a lasting impact on our children's future. And we can talk about how that applies with sustainability and ESG more broadly. The other piece is we wanted to make sure we were doing it with people we really wanted to be with and to spend time with. Particularly around COVID, you understood, we all did, that life is short. And so the people you choose to spend it with really matter. And so we were very intentional in saying we wanted to spend the next 10 years of our lives building something that mattered for our children and building it with people that we really wanted to be around. And that was at the essence of what brought us together and why we began to orient around the topic of sustainability. On a personal level, I'm new to the sustainability topic, always aware of it, but it wasn't my core focus. The area of focus around sustainability really came from my partner. He sold his last company to WeWork at the height of WeWork madness, and that's another story for another day. But once he was there, he was actually asked to take on the global sustainability strategy and ambition. And like anything that WeWork did, it was big and it was bold. And that introduced him really to the nuts and bolts of what does it take to develop and implement a sustainability strategy in a very large organization. And I, having spent a few years building a number of different companies, was really focused on what is the next big theme that is going to transform the enterprise. And that's really been the throughput of all the things I've done, sort of large enterprise where software is a catalyst for helping scale change and really culture change in companies. I've worked in the customer experience space as digital was disrupting everything. I worked in the HR space as the on-demand workforce came on board. These are big transformational shifts. And it was immediate upon our discussion that sustainability was one of those transformations. and it was going to be culturally led and impact every part of the business. And so for us, that was really the starting point of where we began our journey. And then you start to get to the point of how you think about, okay, now let's think about what the natural evolution of a startup is. And for us, it was very focused on on a mission of how do we help companies narrow the gap between intention and action. And the company started as the name Climate Club with a totally different focus than where we are today, which we thought would help companies narrow that gap. What we realized relatively quickly with our earliest customers is that it didn't. And so we pivoted and we tried something else. And then we pivoted again and we tried something else. And ultimately, what we realized is that in order for companies to really drive change, they have to treat sustainability and carbon specifically like they treat any other business objective or metric. So we talk about it through the lens of you have to treat carbon like a currency. And so then we did a bunch of research that said, what is preventing you in organizations from doing that? And sustainability leaders and finance leaders and COOs all said the same thing. We don't have a great plan that translate 2040 ambitions or 2030 ambitions into actionable plans that we can implement in our business. And that's really where Clarasight came about, which is we are a carbon planning platform, helping companies treat carbon like a currency and plan their emissions reduction journey the same way they do their financial planning and their business planning.
So when you say treat their carbon like a currency, you budget for so much per year, and of course that amount goes down year after year after year if you've got to reach 2040 targets and so forth. Tell me how that works. Am I understanding it correctly?
That's exactly right. And at the end of the day, large organizations all have to structure things the same way. They have to set goals and targets. Mm-hmm. They have to build a very clear plan of what are they going to do to get there, who is going to do it, who's accountable for it, who's responsible for it, who's consulted in that process, and what are the impacts of those actions on the other parts of the organization and the other metrics that they care about, like revenue or costs or other things. And in order to think about carbon and sustainability generally, it impacts every piece of that business. And so fundamentally, in order to build a plan, if you look at the most successful projects and the most successful organizations at implementing these initiatives, they are really detailed and focused on planning. And historically, that's been around energy transition, planning who is going to do this, what offices are going to make this transition, what's the cost of implementing it, what's the ROI, who's responsible for it. And so there really is a template and a model for success that allows you to think about it. And as we move more and more into scope 3, that's more challenging, but the fundamental principles still remain the same.
So what are you seeing with your customers, your clients? What has been the thing you've seen that has worked the best? In other words, the biggest success amongst your customers and clients, and the biggest frustration?
Well, I think the biggest frustration, and this is true not just of our customers, but in the market, right, is how do you get executive alignment and sponsorship around this issue and this idea? How do you elevate its importance? And then get buy-in from the appropriate stakeholders to participate beyond the cursory hand wave. And then the second piece is there's been so much orientation around reporting. And the thing that we see, and what is really challenging for most organizations as we pivot from a reporting-oriented world and now in a CSRD-led world, we have to think about actually taking action and driving emissions reduction, is that fundamentally sustainability and ESG for reporting's sake is a different animal and requires different capabilities and things than taking action. And that's no different than as we think about, financial reporting versus financial business planning, right? Financial reporting was built through a construct, in the US of accounting rules and principles. Companies don't manage their day-to-day business performance with accounting rules. They manage it with cash flow and other KPI metrics that are forward-looking. And that's no different in sustainability. So in addition to needing to get executive alignment for these things, you also have to reorient yourself to say all the time and investment I've spent trying to de-risk the business through reporting, I now need to rethink and complement that to be more forward-looking and action-oriented. And oftentimes reporting and action really are in conflict with one another. So that's really what we're seeing across the board.
So peer into your crystal ball and tell me, how do you think AI is going to intersect with ESG and with reporting?
It's a fascinating question. I don't think you get through, an hour conversation without someone asking about AI or talking about it. I'd say I can't speak to what AI is going to do over a multi-year time horizon. The rate and pace of change is so dramatic. I think we all underestimate its potential impact. But what I will say is, in the nearer term, I think we overestimate the impact that AI is going to have thematically. Now, I think there are some really terrific applications of AI around things like climate risk and understanding disclosures. But when it comes to taking action, and I use, again, the financial planning construct, you tend to be pretty hesitant around applying AI to forecasting and planning because AI is imperfect.
Right.
And so I think AI is going to be a critically important tool and really be a co-pilot in the near term to help automate and accelerate some of the manual processes that we go through. But it's not going to be that silver bullet that can help us unlock this unmet potential in the nearer term. And my aspiration is that we learn and evolve, and in a couple of years, we'll start seeing more and more impact. But generally speaking, in my learning and listening, we overestimate impact in the short term and we underestimate impact in the longer term.
Yeah, I would completely agree with that. So what do you see on the horizon for ESG, through the end of 2024 and perhaps into 2025 here in the US, but also I know you work globally, so give me your global perspective as well.
Yeah, I think it's going to be really interesting. The US market to me is at a state of uncertainty. And I think when we focus primarily in working with large organizations, and certainty is actually one of the things that is most important for these businesses. And so uncertainty usually means a bit of paralysis and waiting. We saw that certainly as organizations were waiting to see what the SEC rules were like. And I think we're seeing that still as the litigation around it, and then ultimately, the elections coming up later this year. And so you're going to have organizations really waiting to see how things net out and being very intentional and focused about where and how they place bets in the immediate term. And that's probably going to be pervasive across the ESG landscape in the US as we wait to see that out and as the climate that we're in really plays out in going forward. And so you'll see sort of minimal investment, very much focused on risk mitigation and reporting, sort of checking the box to make sure they're prepared to react as more clarity and more certainty comes. I think the global market is actually different, where you're seeing CSRD, even with all its uncertainty, really catalyzing action and change in larger organizations. And so I think you're going to start to see even a bigger disparity in the way the European markets, particularly Singapore, some of the other advanced markets, are really pushing organizations to act. And that will not just be through reporting and clarity, it will be through working with their upstream and downstream suppliers and really pushing to take action and having real carrots and sticks tied to the performance against those actions and goals in the nearer term.
I completely agree with that. And I also have often said to my clients that at this point, it is almost irrelevant if and when the US ever promulgates regs. Because if you do business outside of the US, almost in any jurisdiction, you are going to have to comply with those regs, which are much further down the road than, the US is on our journey. So, maybe eventually the US will issue carbon reduction regs or disclosure rules, but even in the meantime, US companies have to act. The EU and the UK and even California, their rules are much further ahead of than the SEC is. So my advice is don't wait, just as you said.
I think you're right. And you said something really important, which is, and I'm lucky enough, I probably speak with 20 or 30 sustainability leaders of large companies a week. And the thing that I've learned over the last sort of 6 to 9 months is there are only a couple of things that really drive and catalyze action in these companies. And absolutely regulatory is one of them.
Mhm.
But what I found is that regulatory action tends not to be the primary driver, except for some of the absolute largest organizations. And that, to your point, if you have real exposure to the European markets, that's doing it. It's why you see organizations like Microsoft, like the big pharma companies, like Google, like Meta, like Intel being so progressive. The bigger driver as you get below that biggest level of organization is actually that my clients or my customers are asking me to do it. And whether you're talking about Salesforce's mandate where they have a 1% penalty, or some of the really ambitious things that I know we're going to hear about at Legal ESG in a few months from the big European insurance companies, that's actually what's driving the next layer of change. Because if you can quantify the revenue risk associated with not taking action, and therefore pick your largest customer or largest client, they're not going to do business with you anymore. That's actually probably the biggest driver of action. And so you're going to feel that flow down, and that will hit US companies, and it will hit European companies, and it will hit Latin American companies. And so I actually think that's going to be the single biggest driver. Ultimately, that's regulatory driven, but many organizations will feel it through the lens of my customers and clients are demanding not just reporting, but action.
Yeah, and I think that's particularly true for our listeners who are law firms, who for the most part are privately held, and the regulations aren't going to reach them anyway, for the most part. But they're feeling the pressure, as you said, from client companies that are on the journey, and they expect their vendors to be on the journey with them.
Absolutely. And for law firms particularly, I'd say professional services generally, what we are seeing with the largest organizations, rightly or wrongly, is they are focusing on their professional services supply chain as the initial focus for pushing for emissions reduction. And there's a number of reasons for it. One, it's perceived to be easier than trying to change your manufacturing supply chain. But maybe in a more practical sense, and I know folks don't like to hear this, is it's perceived that the switching costs are the lowest. And so when you look for where should I be trying to take action, in the largest companies, you're talking about professional services spend to be, in excess of $1 billion a year. And so it's real money. And the perceived notion of switching from consulting firm one or consulting firm two, or law firm one to law firm two, the perception is that if you were to make that switch, it's much less painful because I probably already work with them already and I'm really mixing my spend than it is I have to figure out how I change from specialty manufacturer one, where there may only be one or two alternatives globally, and it might take 5 years to change. And so I think you're going to see from a professional services context really facing a lot of that impact over the next 24 months.
Yeah, that's a great comment. So if I were to have you back on the podcast a year from now, what will be on our list of topics to discuss?
I think from generally speaking, and from a law firm and professional services perspective, we're going to be talking a bunch about carbon budgets and client specific sustainability goals. And what I mean by that is not only are our clients asking for us to take action and show progress on action, but actually collaborating with our clients to set goals and to have a shared definition of success together to achieve ESG and sustainability outcomes. So I think that will really be an evolving theme over the next year. And you're going to see the leading law firms, the progressive ones who lean into this, really differentiate themselves in the market to grow share of mind, share of wallet, and increase trusted advisor status. And I think we've already started to see that in the traditional management consulting context, where global leaders like E&Y or global leaders like BCG have really turned that collaboration into a strategic differentiator in the market that allows them to grow billings, grow differentiation, and really be that trusted partner. And I think you'll see law firms start to adopt that too. And the ones that are willing to be a little bit uncomfortable and take the first leap. I know lawyers are not necessarily the most innovative in the space. You're going to see outsized returns really starting over the next year, and the winners will begin to start to quantify that impact in a more material way.
Yeah, I completely agree. And I also really love what you said about collaboration, because what I've seen is for the firms that lean into this with their clients, it's one more way to deepen the relationship. Additional people connecting from my firm to your client company, all working towards these goals. And it, if anything, it cements the relationship rather than, to your earlier comment about putting the relationship at risk if we're not being proactive on this journey. So I hope you're right, and I would love to see that. My final question of you as we wrap it up, given that this is such a challenging space to work in, what gives you hope? What keeps you plugging away every day?
Well, I think for most people, and this is not just true for me or in this space, it's about experiencing the ambitious people who are willing to challenge the status quo and try to drive change. And in sustainability, you've seen a group of leaders in this newer wave of sustainability-oriented executives that are really transformation experts. And they are some of the most fascinating and inspiring individuals you can be around. And I find that to be one of the joys of the job and something that truly brings hope. And in every organization that I work with, there is an individual, and it really is a person. Sometimes they're a senior executive, sometimes they're a middle level executive, sometimes they're a catalyst for change in a lower part of the organization, who has fundamentally said, I am going to help my organization understand how investing in sustainability will help us win, help us achieve our purpose. And to me, that brings me incredible hope. And I think we're seeing the results of that from organizations big and small. And if there are individuals like that, I believe we can build movements. And at the end of the day, this is going to be something where sustainability is going to be an enabler of business performance. And what we've seen in all of these regards, and I think there's great comps in the market over the last 20 or 30 years in trends, the early adopters of a trend who can then quantify the impact on their business of taking that risk, gain outside rewards, and then everyone will follow. And so those individuals who are willing to do it are what gives me the hope that it's possible.
And we're already seeing some of the results, at least in the legal profession. You and I have both had the privilege of working with firms that are leaning in and therefore, clearly differentiating themselves in the marketplace. And it is quite exciting to see that. Thank you so much for your time and for your insights, Phil. And for those who are interested, we will be speaking and recording a podcast with Phil's co-founder, Adam Brown. That will be in a couple of weeks. So you'll get to hear his side of the story as well. Thank you again so much for your time.
Thanks for having me. I really appreciate it.